please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
I'm very, very pleased to share with you that this quarter and this year ending has been a year of significant milestones in our life cycle, which is almost closing into 14 years. This is the first time that the bank's total balance sheet has crossed 3 lakh crores in total assets. The first time our total deposits have crossed 2 lakh crores, and it's also the first time our total loans as in advances have also crossed 2 lakh crores. And there is one very important adjacent development, and you will recall roughly about 3 odd years ago, we were the first bank to commence business, international business in Gandhinagar at the International Banking Unit in Gift City, roughly about 3.5 years ago. I'm very pleased to report to you that that unit has also crossed $2.5 billion in total assets. Actually, it stands at $2.8 billion. So this year, fiscal ended 18 has been quite a record in many, many ways, and is a stepping stone towards YESBANK now evolving as a meaningful large bank, a large home country bank in our country, India. I do want to mention that the growth has come not only from our corporate businesses, but there has been very meaningful contribution by MSME businesses, by retail, and I will dwell on the numbers in a short while. I also wish to emphasize that in the overall scheme of things, that bases the growth in a fairly challenging year with a lot of tailwinds now accreting, but there were headwinds in the former part of the year. The bank is of the view that we can continue with sustained growth at least for the next 2 years when we complete the first phase of our large bank phase. Our asset quality, which as you know, for more than a year plus has been top of the mind in the banking system, has demonstrated significant improvement. It's amongst best in class, I think in the top 3 of all private and public sector banks included. Our gross NPA has improved sequentially from 1.72% to 1.28%, and net NPA has improved to 0.64% from 0.93% sequentially. Credit costs for the year has been contained at 76 basis points against some market forecasts that were expecting this to be north of 100 basis points. I'm very, very happy with this outcome and delighted to share that in a very, very challenging year, we have been able to contain this and not compromise whatsoever in our P&L as well as balance sheet growth outcomes. The bank continues to be in a leadership position in the digital space. We have been ranked number 2 across all public, all private, all payments and foreign banks by the Ministry of Electronics and Information Technology for the year ended March 2018. And this is also a reflection of our strategy, which is being implemented on war footing to become more and more of a technology company in the primary business of banking, and that's something that we are pushing as part of our Future Now strategy. I now want to dwell on some numbers in more detail. Net profit for this quarter went up 29% to an overall of 1,179 crores. And for the year as a whole, it was up by 26.9% to an aggregate of 4,224.6 crores. So definitely a record year for our still very young bank. Net interest income for the quarter grew by 31.4%, and for the year as a whole grew by 33.5% to a level of 7,700 4,437 crores for the fiscal year ended March 18. NIMs stood at 3.4% for the quarter, but for the year as a whole, they were at 3.5, a slight improvement over fiscal 17 from 3.4 to 3.5%. Non-interest income for the quarter sequentially, year-on-year rather, grew by about 13% to 1,421 crores, and for the year as a whole stood at 5,223 crores, representing a year-on-year increase of 25.7%. Of this, corporate trade and remittances, cash management grew 100%. It was a 100% increase in what we call very, very core non-interest income. And this is despite the fact that the year 17-18 had very nominal bond gains, product penetration across the board, and very, very core penetration, which to me would be classified more as annuity income and practically nothing which is one-off in here. Stable cost-to-income ratio, a growing bank, it's important that we keep our eyes on cost control. For the quarter, cost-income was 40.3, and for the year as a whole, it was 40.2, somewhat better than fiscal 17, where it stood at 41.4. So an improvement of about 1.2% year-on-year as far as cost-to-income is concerned. The overall productivity metrics are reasonably satisfactory, with ROA at 1.6% and ROE for the quarter at 18.8. For the year as a whole, ROA was 1.6 and ROE for the year as a whole was at 17.7%, despite a capital raise just about a year ago towards the end of March 2017. The book value of our share, the 2 rupees share now, is at 111.8. So it would have been approximately 560 rupees for a 10 rupee share, but now that we are at 2 rupees, it's 111.8 rupees. Balance sheet numbers, some I have mentioned. Overall total asset growth of 45.3% year-on-year to a level of 3,12,445.6 crores, with the international banking unit growing year-on-year by 166% to a level of $2.8 billion, as I mentioned to you. Deposits year-on-year have grown by 40.5% to a level of 2,738 crores. CASA year-on-year grew 36.5%. It stands at 36.5% on the back of 41.1% year-on-year growth, within which SA stood at 44,000 crores, 44,350 crores. CAS stood at 28,826 crores approximately, representing an increase, strong growth of 35.3% in savings accounts and 51% in current accounts. So overall, this has been a very satisfactory year for core fundamental CASA growth as well, with CASA plus retail now aggregating to 57.2%. On loans and advances, the bank has grown by 53.9%. So this is one of our record years on a slightly larger denominator, to now a level of 2,03,533.9 crores. And this is, as I mentioned, on the back of fairly consistent growth in corporate, MSME, and retail businesses, with retail alone, the core retail growing by 99.1%, and now retail core stands at 12.2%. And I will also add to that the MSME number. So in aggregate, we are roughly about now at 32% as far as branch banking loan assets are concerned. So we are practically now back to pre-GST, pre-demonetization levels as far as retail growth is concerned, which is a good signal, and naturally in future quarters, these numbers will stack up even better. In terms of composition of our loan book, the corporate businesses, and as I have reported to you in the past, that these are spread over 8 different kinds of corporate businesses, and they in aggregate constitute about 67.9% of our total, and within that 7.1% is our IBU assets in Gandhinagar.